recession. And the reason is there are just too many areas of the economy that are performing, too well. And of course, I would point to the labor market in particular. As I mentioned, it's true that growth is slowing, and for reasons that we understand. Really, the growth was extraordinarily high last year, 5.5%. We would have expected growth to slow. There's also more slowing going on now.
What is going on, guys? I was just tuning into CNBC to see what they're saying about the GDP and the recession, because I want to see how they're framing whether we're in a recession or not. Obviously, you're going to hear this. Let me just turn this on mute.
I did it.
Obviously, you're going to hear this jump around back and forth quite often because it is somewhat of a political situation now. That, whether we call this a recession or not, but for those of you that are just tuning in, the advanced estimate, which is the first estimate for Q2 GDP, shows that Q2 GDP contracted by 0.9%, meaning negative 0.9%. So obviously you see Q1 GDP was negative 1.6. This is the second back-to-back negative quarter. Now, we talked about this yesterday for those of you that had joined the live yesterday, and the potential effects that this would have on the market. Well, if you paid attention to that and you were tracking what the Federal Reserve Bank of Atlanta was estimating, they were estimating initially negative 1.6% for the GDP. Now they are tracking, as of yesterday, before the GDP came out, they revised their estimate to negative 1.2%. So these numbers are basically what the market was pricing in, because these are some of the official, or I wouldn't say official, but some of the most credible projections that we have is from the actual Federal Reserve itself. So when we got a first reading of negative 0.9, that is obviously not as bad as negative 1.6, not as bad as negative 1.2. So what I was saying yesterday was that if we get estimates that are around what the Federal Reserve Bank of Atlanta is estimating, or better, then the market is not going to tank solely because of a recession reading, right? Because now that is priced in, based on the data that we've had for a few weeks now, that negative 1.6 came out on July 19th. And even before that, they had estimated a negative GDP. So this has been out for a few weeks, and the market has had a chance to absorb this. Obviously, the market is forward-looking. The way that the market works is that once information comes out, it starts reacting in real time to that information. But when that information has passed, then it's not going to have as big of an effect, if not an effect at all, on the market. So on July, what was it? After that recession reading came out, the initial GDP readings or projections came out, you did see the market drop a bit. Obviously, we've been dropping since January due to due to inflation, due to the fears of a recession, due to bad earnings from the first quarter of 2022. And now we are here, right? So what is left to really drive the markets? Well, we still have Apple and Amazon earnings tonight, as of the time of this live. And Apple, obviously being the biggest company in the world, we saw Meta completely whiff on earnings. And what is the price of Meta right now? After hours, it was up, then down, and now it's down. Let's see, it was down yesterday 4.5%, and it is up. Oh, actually, I'm looking at, sorry, I forget that this is, the market has not opened yet. The timing in Portugal is a little off. So the market opens in 25 minutes. So Meta is actually down about 5% now, maybe a little less than 5%, from where we closed yesterday, trading at 161. So, we will see how Apple does on earnings. Again, this is the biggest company on planet Earth, and we want to see what Apple does here. Now, in terms of how the market is reacting, we can see that futures at the moment are slightly down, negative 0.37 on the NASDAQ, negative 0.11 on the S&P, negative 0.13 on the Dow Jones. These right here, if you guys are wondering, these are the cash secured puts that I sold. So instead of choosing to buy stocks back in June, I actually sold these cash secured puts on stocks that I wanted to own: Apple, Microsoft, the triple Qs, Tesla, and I have a few others on a different account. But you could see the power of cash secured puts. I mean, already these are up. I can basically close these out here for most of the profit, because 100% profit is the max that you can receive. So like on the triple Qs, I'm up almost 87%, Microsoft 81, Tesla 83%, Apple, I'm up 73%. So I will likely close the Apple one out today, since they already since they're going to report earnings, and I don't want to really mess with that profitability, and I can lock in most of the profit now as opposed to waiting until October, which is when these expire. And Tesla, Microsoft, I can close these as well. I mean, since they already reported earnings, as well as the triple Qs. And then sell another batch of cash secured puts if we get another drop here. And obviously I will send this stuff out in the Discord. So if you guys are not part of the Academy, make sure that you sign up using the link in the description below. Yesterday, we did have some day trades sent out by some of the analysts during the Jerome Powell speech and right after, expecting the market to rocket. Because I was looking at some of the data from the last 3 FOMC meetings this year, and after every single FOMC meeting, after Jerome Powell was done speaking, or after the Fed rate hikes were actually announced, the market rallied hard. And yesterday, the market rallied even harder because that revised estimate of the GDP from the Federal Reserve of Atlanta came in even less than it had initially projected. So let me get to your questions here. Let me see. 1 second. All right. GDP, sorry, blah, blah. Time for recession. Yeah, we are officially in a recession if we are going by traditional metrics. Actually, you know what? I didn't even announce this. 1 second. Live now. Okay. Yeah, we are officially in a recession. Yes. Best time to invest is during a recession. Yep. Ramil says the best time to invest is definitely during a recession. This is something that I brought up time and time again, that if you invested in every single recession, if you only picked the recession, then you would have made money each and every time. So investing when an official recession is announced is a great strategy for the long term. Let's see. GDP was 0.9, negative 0.9 at William Beats, not 0.9. GDP not in the negative, 0.3. Have no idea what you're talking about, Gabriel. But that's not the US GDP. Kind of priced in as pre-market, did not react much. Yes, priced in because it is better than what was expected. GDP was negative 0.9, confirmed that we are in a recession. Yep. Good morning, Z. Hello from Spain. What's going on? Made 18K in Teladoc puts. Good job. Thank you for taking the time to update us. No problem, Francisco. Regine, what's going on? Good to see you. Bruno, what's going on, man? Tommy Lasseter, where in Portugal are you? I'm in Lisbon. Bring me some pastéis de nata, please. All right, man, but I can't guarantee that they'll be good on the flight. Take the profit ASAP. Yeah, I mean, we're up almost, very, very close. Did you eat bacalhau? Yes, a lot. Some good, most good, some not so good. What were the numbers this morning? Negative 0.9%. So officially a negative GDP reading. That's back-to-back negative GDP readings. Looks like the market taking the news well. Yes, Yamit. I've been saying this time and time again. If it comes in better than expected, as it did, we will be, the market will likely not react as heavily. However, we still have Amazon earnings and we still have Apple earnings. So Apple's the biggest company in the world. Amazon, one of the biggest companies in the world. Definitely enough to move the markets if they completely whiff on earnings. If they actually come in better than expected, then yeah, we could have seen a temporary bottom. Can you comment on why the VIX is so low still? Well, I mean, Bruno, it's pretty self-evident, right? It's the GDP, a negative GDP was priced in, right? And then the GDP comes in even less negative than what the Federal Reserve of Atlanta had projected. So, and what is left? What is left, right? Like we had on Tuesday, we had Microsoft earnings and we had Google earnings, or Alphabet. You know, we also had the FOMC meeting on Wednesday. We had Meta earnings on Wednesday, and we have Apple and Amazon earnings on Thursday. So there isn't much left by way of events. We have the PCE coming out on Friday, but the market cares more about CPI than they do about PCE. By the way, guys, hit that thumbs up so that other people can find the stream. It takes you a second. Define a recession. Well, Matt Bear, historically, a recession is defined as back-to-back negative GDP quarters. However, if you look at the Bureau of Economic Research, right now they will define a recession as a prolonged period of negative decline in the economy, right? So the reason that the back-to-back GDP quarter definition is used is because that is more objective. It's a more objective metric. When you say, oh, a recession is any prolonged period in in negative activity in the economy, well, that's not numerical. So how would a group define a recession if that is the definition you go by? That is why it's still acceptable by most people that unless it's convenient or inconvenient for you, like if you are the political party in power, you definitely want to rewrite definitions, right? So you know, when we're talking about the economy, it's better to decide on objective metrics, and that way you can actually institute policy that works to combat the objective metrics that might negatively affect the economy, if that makes sense. All right. How long is the intervals between GDP releases? It's quarter by quarter. That's why it's called Q1, Q2, Q3, Q4. So there are 4 quarters in a year. And if there's 12 months in a year, that means that each quarter is 3 months, right? Morning Z from Singapore. What's going on, Rena? Emmanuel, what's going on, man? We are in bottom now. Munir Udin says, if Apple and Amazon earnings and or guidance are good, yeah, I believe we saw a temporary bottom, because I don't think there is much else besides the next CPI report in August and the next FOMC meeting in September that can really move the markets. Love from Amsterdam. What's going on, Arslan? Will you wait some time to DCA? I will, you know, the minute that we get a, you know, so for me, anytime that we get an official recession reading, I tend to invest, right? Why is the bank says it's not yet officially declared a recession? Well, obviously that's political, Boris Love. Obviously that's political. Are we in a recession now then? Jesus Christ, like, guys, I don't know how many more ways to say this. By traditional metrics, yes, there will be some in the media that will try to redefine this because it is convenient. This happens all the time by both parties. But if you're going off of traditional metrics, then yeah, we are in a recession. How is a recession priced in when Powell said yesterday we're not in a recession? What do you think, Paul? And how do you think Jerome Powell's demeanor and body language was yesterday when he was asked that? Did you see him answer the question directly, or was he dodging? When Steve Leisman asked him the question, how was he acting? How many times did he get posed that question before he actually somewhat answered it? And what is the reason? If he, you know, with conviction believed that we're not in a recession, how do you think he would have answered it versus how he answered it, right? So there you go. Back to your country of heritage, Ben says. Portugal is not my country of heritage. Not sure what you mean. Let me know what you mean. Reagan Baker, what's going on, Z? What's going on? what are you expecting the market to react? As I said yesterday, Jay, I don't expect the market to react heavily from this from this reading itself, right? This reading in a vacuum to me is mostly priced in, because we expected worse and it came in better, even though it's still negative. But a slight recession to me was priced in. You're getting you're getting drilled by more recession questions than Powell yesterday. That's a good one. When is recession officially expected to be reported? It depends on who's reporting it, Yamit. I mean, I guarantee you, if you turn on Fox News, they'll be reporting that we're in a recession because they are on the other side of the political spectrum, and you know, the right, or the Republicans, I guess, are trying to obviously win the election in November, and the Democrats are trying to win the election. So one side is going to tell you, the side that's currently in power, that's not trying to lose power, is going to tell you that we're not in a recession, and the side that is trying to gain power is going to tell you how bad it is and that we need to have a transfer of power in order for things to be better. I mean, it's just common sense. It's just politics. Again, this is not a partisan take. This is an objective take, that both parties will do whatever it takes, and they will both do the same thing depending on who's in power and who's not, right? Like if the Republicans were in power and the Democrats weren't, then the Democrats would for sure be screaming recession right now, right? And the Republicans would say, no, unemployment is super low, we can't be in a recession. So it's politics. What is your timeline on exiting this bear market? Well, the average bear market does last 11 months. And typically in an election cycle, we tend to see, in an election year, which we have here in the US, after the election, no matter who the victor is, by the way, it's just the fact that the election is over and the uncertainty is removed, that you tend to see the market rally after the election is over, right? Like there could be a lot of volatility right before the election because of the political fuckery, and how that might play out in the markets and in investor sentiment and in consumer sentiment. But you know, after the election is over, regardless of who wins, then that uncertainty is alleviated and you tend to see the markets rally. So I would say that, you know, if Apple and Amazon report good earnings today, the market will continue to, this is why I drew that pattern. Where is this? This is why I drew this pattern on the SPX a few weeks ago, saying that, hey, we could see this play out where the SPX actually gets to that like 4150 level if Amazon and Apple earnings are good, and if the GDP comes in not as bad as expected, and if the Fed doesn't surprise, which they didn't. They came in with a rate hike that everyone thought they would come in with, which is 75 basis points, then this technical level is very doable, right? And you know, I was getting some pushback from people saying that that was crazy and that, you know, things are a lot worse. How can we get back up to you know, above 4,000 on the S&P, which we currently are? But I mean, this is how the market goes. Technical levels are important. Stuff is priced in. Usually the things that lead to the indicators that lead to whether we're in a recession or not are lagging indicators, meaning everything is in the past and it's known and priced in, which is part of the reason why the market kept tanking all the way down to, you know, 3640 on the S&P 500. So yeah, I mean, hopefully that makes sense. EV stocks green in pre-market. Yeah, wasn't there some legislation about EV stock? I think it was the Chuck Schumer, Joe Manchin agreement on taxes, on climate, on blah, blah, blah. And EVs, there was some implication on EVs in that. So Noble Phillip, Z doesn't pull out. What the fuck? You guys are crazy. You guys are nuts. Can we expect short covering today? I'm not sure there were a ton of shorts. If you look at the S&P, or else the VIX would have been up significantly. If you look at the S&P 500 options, You know what? I'm going to close Thinkorswim because I think it's causing some issues with the stream. So I'm going to close Thinkorswim and leave the rest of the stuff open. All right, this recession might not be as bad as 2008. No, definitely no. The recession in 2008 was fucking terrible. You know, I mean, we had extreme defaults on mortgages, which led to closures of insurance companies and closures of mortgage companies. And you had huge banks like Lehman Brothers go down. This is not the same thing. This is not the same thing. Now, obviously, there could be black swan events that nobody knows about. There could be things brewing up in, you know, the credit market, but we don't have the same type of credit risk that we had in 2008 when, you know, mortgage banks and mortgage brokers were acting recklessly and illegally, really, and not only handing out subprime mortgages to people, but then those mortgages were being packaged as, you know, AAA mortgage-backed securities and sold as high quality MBSs when they weren't. They were full of people who should not even have been qualified to rent an apartment, let alone buy a house. We don't have that currently. And for anyone that's tried to buy a house in the last 10 years, you know how restrictive it is after 2008. It's actually pretty, you have to get a shit ton of fucking documents in order just to buy a house. You know, they want tax returns. They want, if you're self-employed, they want proof that your business is profitable past a certain amount. It is not the same as 2008. Now, could there be a bubble burst somewhere else in the pipeline? Sure, but very hard to bet that this recession will be anything like 2008. However, this all depends on how long inflation lasts, right? So continuing to monitor the CPI numbers is important, and we need to see a drop in CPI, which we haven't seen yet. CPI just continues to go up, you know, well past 9% as of the last reading. So if that continues to climb, then we might be facing stagflationary risks, which could, you know, deepen the recession or steepen the recession. But that doesn't mean that we can't. Don't super chat me. I don't need your money. Just donate it to St. Jude's. You'll feel much better and I'll feel much better. So donate it to St. Jude's. Whoever that was, thank you so much for your donation. No one renting commercial office space in the cities. I mean, Papa Pig, that sounds like something that's anecdotal. You know, you're better off going by actual metrics and not something anecdotal. Let me see what is going on with the stream today. Let me turn off the camera real quick and see if that helps. All right. Did the GDP come in a little better or worse than expected? Sorry if you answered this already. Of course I answered this because that is the crux of the whole video. Yes, it came in better than expected, 0.9%, negative 0.9% versus the expected negative 1.2%. And here it is. And if you guys want, you can actually look at the actual GDP, right? You can go to the bea.gov site. That's the Bureau of Economic. Oh my God, why am I blanking on this? BEA. It's the Bureau of Economic Research, okay? Just click on the current release here and it will take you right to the GDP report. There you go. What is your take on the markets? I've already talked about this. Rewind the tape. Not going to repeat it a million times. How would China's exploding default rate going to impact the US market? You're assuming that they're going to report it honestly, and you're assuming that they're not going to prop up whatever's going on there, right? Like, especially with the currency manipulation that China is known to do. I think it'll be a while before that really becomes an issue, to be honest. Dr. Jennifer Berry, this recession looks more like 2000, just the stock market. NASDAQ dropped 80%, but real estate was unaffected. You know what, Dr. Jennifer, here's what I will agree with you on. That the recession, not the recession, I don't think the recession looks like 2000, but I do think that the stock market did look like 2000, but it was very unique in that, you know, you had the mega cap companies, Amazon, Apple, Facebook, Tesla, Microsoft, Johnson and Johnson, and a few of the big ones really propping up the market, while almost every other stock, I think it was 92% of stocks fell by more than 50%, and something like 80 something percent were down over 70%. So, you know, we did have a lot of bubble bursts, whether we're talking about SPACs or IPOs, or hyper growth, high beta companies, right? Like Roku, Teladoc, basically all the Cathie Wood stocks, the whole ARK portfolio. There was definitely a dot-com like bust, but we didn't feel it in the indices because the indices are heavily weighted towards those top 10 companies. Obviously, Microsoft, Apple, Amazon, Tesla, Google, Facebook, Johnson and Johnson, Berkshire Hathaway. So those companies were really propping up the rest of the market, which is why we didn't feel like the entire market just collapsed beneath its feet. But certainly most stocks did collapse beneath their feet. It's just that, you know, the market was propped up by, well, obviously the Fed as well, but also by the mega cap stocks. So I will agree with you, Dr. Jennifer, that there were some corollaries or parallels, I guess, to 2000, but I don't think the recession looks like 2000, right? JM Garcia, someone please give Z some coffee. It's not even morning here. It's, well, what is it? It's like 2:30 here. Yeah, Shafiq, it's right. It's 2:30 p.m. You told you gonna load puts. When did I say I was gonna load puts? Show me the proof. I didn't say that here, and you definitely can't find any record of it in the Discord. Let's see. In your opinion, are we at market bottom? Again, Amazon, Apple. That's all I'm going to tell you. I need Amazon to drop. Well, you need it to report really bad earnings and give terrible guidance, or else it likely won't drop. And Jean Picot, LMAO. Not sure what you're laughing at. Google and U.S. chip maker Skywater expand open source chip design manufacturing. Interesting. Sonar, what's going on? All right, let's see what is going on. Oh, you know what? Let's see what's going on with CNBC. I wonder if they're defining this as a recession or not.
China opening means anything for
people aren't really going out in China. That's a very good company, but we still, I mean, everybody still cites China as being one of the great negatives in the world right now. And no one's talking necessarily that the president for life, Xi, is going to be president for life.
Let's get the opening bell here and the CNBC real-time exchange of the big board. It is biopharma Maya Biotechnology celebrating its listing on NYSE American at the NASDAQ. Walden Cass, a beauty and...
All right, they're not talking about it at the moment. They're talking about some company named Maya Biotech, which is ringing the bell at the stock market. But I wanted to see if they were defining this as a recession or not. For those of you that are watching CNBC, let me know. Let me see what actually Market Watch is saying. U.S. economy invites talk of recession as GDP shows contraction in the second quarter. Okay, the U.S. economy shrank at an annual 0.9% pace, blah, blah, blah. Gross domestic has shrunk at a 1.6% pace in the first 3 months of the year. While 2 straight quarters of declining GDP has been commonly viewed as a recession, the group of prominent economists responsible for declaring official recessions takes a broader view that suggests the old rule of thumb does not always apply. The definition of recession has become a subject of fierce debate ahead of the pivotal U.S. elections in the fall. See, for those of you that think that I'm being hyperbolic when it comes to politics, I mean, here you go. This is an objective article here on MarketWatch. The Biden White House has argued that U.S. is not in a recession, but Republicans want to pin the blame on Democrats for the slowdown in growth, of course, because they're just playing political football at the moment. Economists polled by the Wall Street Journal forecast a 0.3% increase in second quarter GDP. Okay, I hadn't read that. Interesting that they thought it would be positive when, you know, if you just went by the White House's actions, you were like, oh, for sure this shit's coming in negative because they're scrambling, like Peyton Manning in an audible, trying to change the definition of a recession, right? So, Dr. Jennifer Berry, they're being real political about on news outlets. Although we meet the historical definition of recession, but not the broader definition that includes poor employment numbers. Here's, you know what, Dr. Jennifer, and for the rest of you, this is what I was looking at. These gray bars here are showcase every recession since World War II, right? Every time, almost every single time, unemployment was historically low. So this idea that unemployment being low is a negator of declaring an official recession is nonsense. Look at this. 2007, historically low unemployment. 2000, historically low unemployment. 1990, historically low unemployment. 1979, historically low unemployment. 1973, historically low unemployment. 1969, historically low unemployment, even lower than it is now. Every single time before a recession, you have unemployment that is historically low for that time period. Look at all the way back in 1953, the fucking unemployment was 2.5%. This is probably because women weren't in the workforce, unfortunately, as much as they are today. So, you know, that could lead to skew numbers, but nonetheless, the data point still exists that you have historically low unemployment before every single recession. So, you know, saying that good employment numbers negates the fact that we're in a recession is bullshit, because you see this almost before every single recession. So yeah, and plus all of these companies that are reporting layoffs or freezes in hiring, that will likely show itself in the next unemployment report, right? So unemployment will start ticking up, and just as it does every single recession, it goes from historically low to starting to get a bit worse. Z, do you like Mexican food? Thank you for staying on topic, Adrian. Yes, I love Mexican food. Omar, what's going on, man? EV stocks are green. Yeah, this is because of the agreement between Joe Manchin and Chuck Schumer and the rest of Congress about there's some new planning in the way of taxes, in the way of climate, climate bills, etc. And part of that does reflect I think some sort of subsidy towards EVs, right? So I'm learning a lot here. I'm trying to be logical rather than impulsive, reflecting on actual information rather than just guessing. Yes, thank you, Cyan. That is the way you should go about it for sure. Tesla is a money-making monster. Yeah. Will you wait for Amazon, Apple earnings to start buying stocks heavily? I showed you my portfolio. It mainly consists of selling cash secured puts. That is the way that I decided to start nibbling in the stock market back in June. Will I start buying stocks? Yeah, I'll start adding stocks here for the long-term portfolio. Like I said before, I mean, the minute that a recession is declared, I usually start buying stocks during that time. Like I'll start dollar cost averaging. And who knows, if the CPI comes out higher than even next month, then yeah, you could see another drop in the market. But I mean, it's very, as I said before, and people were kind of clowning me for this back in June, I said the market is closer to a bottom than it is a top. And I wholeheartedly believe that down 30%, I don't see the market going down another 30%. We could, go down incrementally, but I think the bulk of the drop at least for this year, has taken place. It doesn't mean we can't drop further, but again, if you're down 30%, do you think you're going to go down another 30%? Or is it more likely that we'll see incremental drops, 5, another 5, another 10%? That is the camp that I was in. That's the camp that I'm still in. Would you say it's a good entry to buy into Palantir stock? I'm not a huge fan of buying high beta names during this time. When you're getting this much of a steep discount, in my view, and obviously you could do whatever the fuck you want, but in my view, you are better off allocating your resources to powerful blue chip companies that you will likely not get at a discount again. So in my personal view, I would not waste money on high beta stocks. I would much rather own blue chip stocks that are bringing in 50, 60, 70 billion dollar quarters, like the mega cap names, because I likely will not get this discount again. I think there is plenty of opportunity to buy high beta names at any point, but I prefer to buy into high beta names during actual bull markets, because those tend to see significant exponential multiple increases, right? During bull markets. But if we're in a recession, I'd much rather spend my money on blue chip names. So, but to each their own. So yeah, James, good morning. What's going on? How much do you think the upcoming elections have to do with the fact that they are changing the definition of a recession? Obviously, everything. This doesn't take a genius to see this. I did buy SQQQ puts yesterday. Oh, you mean calls, I guess. I probably wouldn't have done that unless you thought that the GDP reading was going to be way worse. If that's the case, then fine. But you're likely suffering at the moment, right? Would you say it's a good entry point? Oh no, I already answered this. I was laughing at the comment you read. Z doesn't pull out. I don't even know why you guys say this stuff. IBM dropped a lot on good earnings, forming a gap. Is it worth it to play now? Is it worth it now to play a potential gap fill? IBM looks like a heart rate monitor. I don't like playing options. You can lose a lot of money trading options on something like this because the price is going to be way too volatile. Plus, IBM is not a very liquid option chain anyway. If you like IBM as a company, sure, you can buy it here. But look at this. I mean, at no point does IBM make you comfortable holding it, even before the pandemic. This shit looks, it looks like a roller coaster at Six Flags, right? Better to buy QQQ calls than SQQQ puts, for sure. QQQ is way more liquid. I think markets will have a golden pocket retracement or bear rally going into elections, but I'm not ruling out the markets taking out current lows by the end of the year. I mean, that's fine, but what is the thesis, right? Due to what? If it's due to wishful thinking because, you want to load up more at a price point that currently doesn't exist, sure, but what are you... what are you basing that off of? Z, you are wrong. We are exposed to ridiculous business loans for small businesses. I know because I run too. Wow. Okay. So we're going to base what goes on with the economy off of two small businesses that you run. That is called anecdotal information. And that means jack shit to large scale macroeconomic projections. Sorry to tell you. I also run small businesses. And that doesn't mean nothing. What goes on with my small businesses has nothing to do with what's going on in the economy. Let's see. The bear market usually lasts an average of between 22 months is way too long. The average bear market lasts 11 and a half months, so even less than a year. Ford looking like a good long-term addition going forward. Very nice EV range and strong U.S. market support. Yes. I don't know gunmetal. Oh, what's going on, gunmetal? Yeah, at this level, what did it do on earnings? Holy shit, 40 billion revenue. Beat on earnings per share, 0.68 versus 0.45. Yeah, I mean, Ford at $10 something was probably a steal. Those were prices that, what was it before the pandemic? Around $10. Okay. Yeah, Ford ran up all the way to $26 beginning of the year. I like it. I wouldn't go insane heavy on it, but I like it. Amir Penkar says, Z, you are wrong because when the Idaho Potato Index comes out and misses, things will be. You guys are clowns. You guys are clowns. Fatima Karua, hey, I'm late. What's going on? ChargePoint, yes, ChargePoint is up as well as all other EV related plays. Are you expecting good or bad Q from AMD? When does AMD report? Next month? August 2nd. I have no clue, honestly, but AMD's chart looks very, very, very similar to the indices, by the way. Yeah. Let's see, Tesla ripping this AM. Let's see, maximum capitulation and panic selling. Cyan, I think we saw a lot of capitulation. I don't think anyone can tell you when is maximum capitulation. But look at this. I mean, literally from January to June, we were fucking tanking, except for that short time frame in March, which was right around earnings. We've been tanking. So we did see a lot of capitulation. Let's see, the VIX spiked to, what was the top of the VIX spike for this year? We had close to 40, not quite 40. I think 38 something, so almost 39. We saw the VIX spike to. So, I mean, you did have some form of capitulation, but nobody can tell you if it's maximum capitulation. Z, you carry around a monitor too. You trade with a single laptop screen. It's not, this is what I carry around. It's an iPad. This is what I use as my second monitor. Because Apple makes it easy to use this as a second monitor. So yeah, no, I don't carry around another monitor. It's just my iPad that I have extended as a second screen. That's how I have like OBS on the left side and then everything going on here in the middle. I'm glad you guys are sticking to what's important. What is your opinion on companies such as SQSP, Wix, etc.? I already talked about this. I can't see myself devoting any significant amount of capital to high beta names here. When you have companies that everyone has been screaming that they wish could go lower so they can own, and obviously they don't buy it once they go lower. I can't imagine devoting money to SQSP or to, what is that, Wix or whatever, when we have a ton of blue chip companies that are at a discount. So, I mean, high beta names, those things you can make a ton of money during major bull markets. Guys, if you're on the stream and you haven't left a thumbs up, hit that thumbs up. Also, don't send me any super chats. I don't need your money. Donate it to St. Jude's. Okay, that would make me happier. SQQ up 2% already, blah, blah, blah. Do you like Meta? I personally don't like Meta. There is a time when I liked Facebook as a company. No, I mean, not as a product. I actually detest Facebook as a company. As a stock, I would say. But with the whole pivot to the metaverse, that's just something that I'm not really into from a business standpoint because I don't see how they're going to make money. They do have a powerful advertising business that is somewhat losing revenue, and you could see that. They reported 29 billion in revenue October, right? Then they reported 33.6 billion in February. Then they reported 27 and now 28. So they hit, They hit a high of 33 something, and now their advertising revenue is dropping. They're losing users, or at least not gaining any new active users, daily active users. And now they're trying to pivot to the metaverse to continue growth. And I just don't see that past their very strong advertising business, which, you know, between 150 and 170 is adequately priced. I just don't see the metaverse future yet. And if I'm not convinced of the business model, I'm not going to buy more of the stock, right? QQQ puts printing. Yes, if you're in the QQQ puts, they're printing. Yes, we are in a recession. Correct. We've only been in a bear market for 7 months. It will take quite a while to reduce inflation to target. Ukraine and Russia still fighting. Wheat shortage, supply issues, macroeconomic picture pretty iffy. I mean, you make a good point, Jennifer. You definitely make a good. Sorry, Dr. Jennifer. I don't mean to besmirch your title. You make a good point. The fact that we've only been in a bear market for 7 months, my opinion, a weak point, Dr. Jennifer. But the rest of your take, sure. Good argument. Good argument. I mean, we've seen one of the worst drops in stock market history, which was COVID 2020, lasted a fucking month. So, you know, the fact that we've only been in a bear market for 7 months doesn't mean anything. We've had short bear markets before. But the rest of your points, valid. And I appreciate your comment. Thank you. Which ETF do you recommend? SPY, SPY-V, QQQ. Have fun. I feel like everyone is trying to avoid saying that we're in a recession. Everyone who? Like in the media? Yeah, of course. Because there's a political incentive to say that. I haven't watched Fox News, but I guarantee if you turn on Fox News, they will probably tell you we're in a recession. So if you want to hear that, tune into your favorite echo chamber. From my standpoint, as long as I've been alive, anytime we've had back-to-back negative GDP quarters, we've defined that as a recession. In my view, no reason to say that it's different now. And as I stated before, low unemployment doesn't mean shit because we see that all the time. Congrats to the guy who bought calls on SQQQ. Yes, sell SPY puts with 46%. Are you talking about cash secure puts, Carlos? Carlos Peralta. There used to be a very famous skateboarding company named Powell Peralta, for those of you that are old. And that is the first time that I've heard this last name outside of that context. Oculus is a flop. It's Fire Phone 2. Okay. Not sure what that means. You mean Firefest? Or, oh, the Amazon Fire Phone. I remember this. Because with the Prime packages, this was a few years ago, they would send out boxes that on the boxes themselves, they would be advertising the Amazon Fire Phone. I remember this. Oh shit, no, I did buy calls. I get confused. Fucking reverse leverage confusion. Just Brandon does not want to say it. No, I think if you look at Omar, if you look at CNBC, you'll see that too. And also, I think mainstream pubs like the Wall Street Journal. However, you know, if you do look at like Market Watch, it doesn't explicitly say we're in a recession, but it says invite talks of a recession. So weird way of wording it. You know, but I guess they're telling you that, hey, you have permission to start talking about a recession, which is funny, but whatever. I think we start to go up Q2 next year. I mean, honestly, Spartak, let me ask you what happens here, okay? Let me give you a hypothetical scenario. Let's say that Apple reports stellar earnings and says, you know what? Nothing in China, none of the inflationary pressures, nothing affected us. And we actually killed earnings. Not only did we kill earnings, but we were about to murder guidance. If Apple said this and Amazon said this, what do you think is going to happen to the market? Z, I just got a CBR 1000RR. Oh my God, I love that bike. Lucky bastard, David Risk. You know what? I used to own the Repsol version. I don't know if you know what that is. I don't know how old you are, but I used to own the Repsol version. It was black and orange. One of my favorite fucking bikes. And be careful out there. Always wear your helmet. I don't know if you're in a crazy state that doesn't mandate you wearing helmets, but always wear your helmet. Do you think chip companies like Nvidia and AMD will go down another 30%? Fuck no. 30%? No, I don't think so. Do you trade 30-year treasury futures? No, I don't. Once they say we're in a recession, we're already out of it. Kind of. I mean, the minute that we start talking about recession, in my view, that is the time to buy. I mean, look at it every single time. Here, let me pull up every recession in history for you. 2008, obviously 2020, which is barely a blip on the screen because it was so tiny. 2001, 1990, 1982, 1980, 1974, 1970. There's no recession that you would have bought that you would have lost money in the long run. So, do you think the student loan payment pause has contributed to inflation? Yes, I think any program that defers payments that constitutes a large part of the macroeconomic picture, you know, whether we're talking about hundreds of billions of dollars or even trillions of dollars, if those payments have been deferred, then what are people doing with that money? What people are doing with that money, especially when interest rates are low, they're likely spending that money on goods and services. So when they spend that money on goods and services, that tends to drive up inflation. So yes, of course, very good question. If you're trying to understand macro econ, very good question. But really, any sort of program that institutes a kind of forbearance in an industry that makes up hundreds of billions or even trillions of dollars, of course, is going to contribute to inflation because now that money has to be spent. Since people have that money extra in their pockets, and when interest rates are low, people are gonna fucking spend that money on motorcycles, on cars, on houses, especially, you know, those big ticket item expenditures, and then other things that at the time were cheap and required, you know, 0% down or 0% APR for a limited time, if you were financing something. So yes, very good question, and yes. Sushi Girl. Market has bottomed. I don't know why I read your name, Sushi Girl. Sushil Giri. Apologies for mispronouncing your name. I answered this already. Rewind the tape. Sorry for mispronouncing your name. But a lot of people were not paying their student loans anyway. Well, if people were not paying their student loans out of necessity, that's one thing. But now when you're telling people en masse that they don't have to pay their student loans, then you're talking about a lot of money in people's pockets as opposed to someone who's not paying their student loans. You guys are laughing at Sushi Girl. Fuck, I need to end the stream. What do you think about Lucid? I think they have a lot to prove. I prefer Tesla any day over Lucid as an investment. All right. All right. Anything we need to talk more about the GDP? Oh, remember that PCE comes out tomorrow. The difference between PCE and CPI. CPI constitutes the collection of expenditures among urban households, and the PCE takes into account all households and, for some reason, nonprofit institutions. So Jerome Powell says that they prefer PCE over CPI. Anyway, those numbers come out tomorrow, even though we already know that CPI is, 9.1% is terrible, but PCE will come out tomorrow as well. So that might have a chance to move the markets a bit. All right, I can go for some Nigiri. Regine says, I'm literally dying. I mean, I think everyone is, including me. All right. Any last minute questions you guys have before I end the stream? This was fun. I appreciate you guys for joining all the time. Hopefully you guys got the picture on GDP. Again, by every objective metric in history, this is a recession. This one will try to be redefined as it comes up very close to a midterm election. But either way, whether it's whether they call it a recession or we're just inviting talks of a recession, as MarketWatch calls it, in my view, it is time to start looking at things for your long-term portfolio. Doesn't mean the market can't drop further. Doesn't mean things can't get worse. But again, go back to every single recession in history, and you will see that that is usually some of the best times to buy. So all right, guys, hopefully you got something out of this. If you did, on your way out, leave a fat thumbs up. Again, don't send me any super chats. Give it to St. Jude's if you haven't done so already, and I appreciate all you guys for your donations. I love each and every one of you. Talk